So today we are going to talk about a topic that is on everybody's mind, particularly if you live in Florida or Southwest Florida, and that is homeowners insurance. And then we're going to get into flood insurance as well. I'm Diane Harris. I'm a luxury property specialist down here in Naples, Southwest Florida. And I am here today with Larry Hitzeman. He's with the Hanger Group Insurance, and he is a part of an all-shore insurance specialist. And Larry's been in the business for 50 plus years. So he is a great resource for us to interview, talk to, and find out what is going on exactly in the homeowners insurance business down here in Florida. So thank you so much for joining us today, Larry. I really appreciate it.
Happy to be here.
Thank you. And we are going to get right into it. And so tell me, is property insurance required in Florida?
It's a quick yes and no answer. The state in no way requires it. You may be required to carry it based on the fact that if you have a mortgage, the mortgage people require you to have a homeowners. And if you're in a specific flood zone, you would then be also required to carry flood.
Okay.
That would be the only reason.
And so tell me, what would make a home uninsurable here in Florida?
There are several issues. One, location. Some locations are easier to insure than others. Good example right now, Sanibel specifically was tough before, now maybe impossible. Marco, barrier islands become difficult.
Okay.
Those are the main reasons. Also, age of structures and company requirements, which have become more restricted as we've moved along.
Okay. All right. And I'm guessing we're going to get into that a little bit more. And so are there additional factors other than what you mentioned that affect, the insurance prices for a home?
Yes, a lot of things can affect insurance prices. Credit score, an individual's credit score comes into play.
Really?
That has been for years. They're now actually, some carriers are doing away with it. The premise is the fact that credit scores have been affecting rates and accessibility for a long time. It's based on the premise that a poor credit score means you have less wherewithal to keep your property maintained and in a safe condition. But in addition to that, other things like, are you in a gated community? Do you have, depending on the age of the home, have you updated the wiring, the plumbing, the HVAC? A major factor is the age of the roof. Mm-hmm. Whether you're masonry or frame, masonry, of course, is better. Protection class, distance to a hydrant, whether you have a sprinkler system, whether you have an alarm system. A major factor that's growing is an automatic water shutoff system.
Interesting. I've not even heard of that. Okay. Good to know.
A real player. The cost is approximate. All these things I mentioned help the rate or hurt the rate, depending on the situation. The automatic water shutoff system, they typically cost around $800. The number one dollar payout on claims in the US is not actually hurricanes like most people think.
Okay.
It's water damage. And that's true nationwide. And that's why they're starting to really endorse the water shutoff.
What is the difference, really? I think it's some people don't understand, and it's good to kind of reiterate this. What is the difference between insuring a single family home as opposed to a condominium?
Really not all that much. Generally, especially if it's a first-time condo buyer, the average person doesn't know what they're getting into. They think that when they go in there, they don't have to buy any insurance. So when they're preparing for the purchase and setting their budgets, they think, particularly if they're going from a home in Florida now to a condo, they wipe the insurance costs totally out. And that's not the case. A homeowner's policy and a condo owner's policy really look almost identically the same. In both cases, you're insuring structure. That's the part that everybody overlooks. You're insuring everything within the confines of your unit.
Mhm.
And in a home, you're insuring everything within the confines of the home. You're insuring the drywall. Same thing in a condo. The only thing in a homeowner's policy, you're insuring the exterior structure.
Mhm.
Here in a condo situation, that becomes common element, and that's insured by the association.
Mhm.
But your unit, anything inside, and that will vary somewhat by the condominium documents. And when you're buying a condo as a purchaser, you would really want to read those condominium documents. Generally, the normal document will say you're responsible from the unfinished surfaces in.
Mhm.
That would mean the unfinished drywall, unfinished flooring, unfinished ceiling. So you add the paint, the wallpaper, the linoleum or marble tiles, you
Okay.
put in the cabinets, the plumbing fixtures, the electrical fixture. You're insuring all that just like you are in a home.
Okay. That makes sense. It's just the exterior structure that typically the HOA is responsible. That's part of your HOA fees
Exactly.
to help with their master policy. Okay.
Yeah.
And so in terms of homeowners insurance, kind of what is the difference between like replacement coverage or value as opposed to actual cash value? Can we talk a little bit about that?
Sure. Replacement cost, basically, short answer is you get new for old. And in the case of, particularly when you're dealing with personal property inside the home, let's say your refrigerator is 10 years old. You paid X number of dollars 10 years ago for that refrigerator, and it ran for 10 years. So what you paid for it depreciated over that period of time, and its value is, let's say you paid $1,000 for it, a 10-year-old refrigerator may be worth $200. So at the time of a loss, your actual dollar amount of your loss to that refrigerator is $200. But you get a check for $200, are you going to be very happy? And that would be no. And so particularly with contents, you can opt to only insure for ACV,
Okay.
but you can then endorse it to pick up replacement costs. So in that case, then you would not get a check for 200, you'd get a check for that same like, kind, and quality, which may be $1,500 today.
Okay. Okay. So that's just an addition to your policy to get you bumped up to the actual cash value. Okay.
Now,
That makes sense.
most dwellings are insured at replacement cost.
Okay. Okay. As
So
standard kind of.
yes. Now, when you get into the structure, you can get guaranteed replacement costs, a whole nother thing.
Okay.
And that would mean that when you have a home insured for replacement costs, that means you get new for old. But that means, particularly here in Florida, where building codes change a lot. Okay. You may have had a home built to code in the year 2010, but your 2010 home is destroyed in 2022. Entirely different building codes. So they owe you a home put back to the home as it was built in 2010. Contractor goes to the county building department to get a permit. And they say, well, I'm sorry, you can't build it that way. And let's say the cost to build a 2010 home in 2020 is $300,000. But you can't build the home, even though the insurance company owes you $300,000, because that's what you lost. To do according to the 2020 code, it will now be $340,000. That $40,000 on a replacement cost policy is not covered.
Okay.
Guaranteed replacement policy will pay you the $340,000.
Good to know. So guaranteed replacement coverage.
Right.
Okay, that's very good to know, especially in our, with our situation down here, because building codes changed a lot,
Exactly.
particularly in
Now,
our situation now.
because of that situation, there also are not a lot of insurance companies that will write guaranteed replacement costs.
Okay.
There are other alternatives, and that's called, and most homeowners come with what's called building code coverage, ordinance and law coverage.
Okay.
OL&T. And the average policy gives you 25% OL&T, ordinance and law coverage. You can endorse that up to 50%.
Interesting. So
The older the home,
20% to 50%.
correct.
Above and beyond your replacement cost.
Yes. The older the home, the more important that coverage becomes. Because in that example we just went through, you lost a 2010 home, but you've got to build it to 2020 code. That $30,000 or $40,000 difference, that's not a fire claim. That's an ordinance and law claim.
Interesting.
Law says you've got to build it that way. The fire didn't say you had to build it that way. The law said you had to build it that way.
Interesting. Okay.
So depending on how different companies handle it, good example was back during Ian. After Ian, and we had in our direct area here, tons of roof claims. Excuse me. And most people got 2 checks. They would settle their claim for $100,000 on the roof, and the insurance company is going to pay $100,000. That's all agreed. They would get a check in the mail for $70,000, and they would become instantly very upset and call and start, I was supposed to get $100,000. Well, insurance companies have different accounting departments, different methods. And think of each line of coverage: fire, hurricane, theft, vandalism. They each have a bucket of money in them.
Okay.
Part of your premium that you pay goes into the fire bucket. Part of it goes into the hurricane bucket. Part goes into the ordinance and law bucket. So when they write their checks out, they write 70,000 out of the hurricane, 30,000 out of the ordinance and law bucket. Unfortunately, the checks never arrive at the same time. And so
you get a lot of phone calls.
Yes. Yeah.
I love it. Let's talk about that. How does that new roof legislation impact homeowners today in Florida?
A lot. It should have a very positive effect, but it's going to, as all changes, we're going to, I'm sure, go through a lot of litigation.
Okay.
The big one is the fact that the statute used to read that if a home was damaged, if a roof was damaged 25% or more, the entire roof had to be replaced.
Okay.
Very, very costly ordinance. That's one of the major things that drives our premiums to be excessive.
Okay.
If you look at it and trying to be in a conservative manner, if you've got a $100,000 roof and most of them are more than that today, but for easy math, you got $100,000 roof and 25% is damaged. So you got $25,000 of something damaged. And because of that, you're throwing away $75,000 worth of good roof, which you mean you're wasting tons of dollars.
Sure.
And that's the way it's been year after year after year. And to also supplement that, the roofing companies share some of the blame here, because about every 2 or 3 years, they change their molds. And so, you know, suddenly a 2 or 3 year old roof, which really has 17 years of lifespan left, is you got to throw it away because you can't match it. So that's kind of sad and kind of serious. Is where this is going to come into play a little bit. In theory, it's a great help and a great change. But then we enter into, in Florida, is highly not regulated, but density with gated homes, gated communities. And then you get into HOA associations. And the HOA associations, of course, they want to keep their community looking the very best.
Absolutely.
Now they're going to ride on this. And when you say you're repairing your roof, they're going to step in and say, no, you're not. Our HOA rules and regulations require that you do this, that, and the other thing. And then, of course, the homeowner is going to come back to the insurance company and say, you know, the HOA association won't let me repair the roof, even though it's repairable. The insurance company, according to this statute, then is going to come back and say, the HOA has no authority with us. Here's your check. If you want to put the entire new roof on, that's perfectly up to you. And so I see it's going to be a bumpy road.
It is. And so before it was 25%, what does that new legislation state now in terms of roof repair and replacement?
If it's 25% and under, you do not have to replace the roof.
Okay.
You're allowed to repair it.
Okay. But if it's 25% and over, still replace.
Yes.
Okay. Okay. And so that's interesting because, you know, we hear that now insurance companies have raised all their rates based on the age of the roofs. Is there like a cusp of an age that all of a sudden that kicks in?
That varies by the carriers.
Okay.
There is one out there that they will not write any home where the roof is older than 5 years.
It's a bit strict.
Yeah, that means they don't want to do it.
Exactly. Exactly.
That's their way of restricting. And the average, most of them are now 15.
Okay.
They want 15 years or newer.
On a tile roof, I'm assuming.
Yes.
Okay.
Yes.
That makes sense. Interesting. What things aren't covered in homeowners insurance? I'm thinking of things like termites, insect damage, mold, you know, are they covered or not?
Generally, no. Those have never been covered as long as I've been in the business. Wear and tear, obvious things, wear and tear, inherent vice, stealing from yourself, sinkhole.
Okay.
Now that varies, and that can be a tough issue. We're not in our particular area here. It's not a big deal.
We're in Southwest Florida, so that makes
Correct.
sense. Okay.
Yeah, you don't get a lot of that.
Interesting.
Although you do have more coverage than what you really think. If you take any policy and look at the very last page, it explains what you are covered for in terms of sinkhole. Your policy may exclude sinkhole coverage, and then there's a definition for what's being excluded. But if your home were to fall into collapse into a deep hole, going back a couple of years ago, there was an example up near Disney World where a home bedroom fell in, a brother went down.
Yes.
That's a sinkhole. Should that happen to your home here and you don't have sinkhole coverage, you're going to get paid.
Really?
Yes.
Interesting.
Yeah. Look at about the very last page of your homeowner policy.
Okay.
Definition of sinkhole is more like minor damage, is what they were being, the carriers were chasing, was someone to see a crack in the stucco.
Okay.
There
Huh.
were three of them, and they want to call that, we've got a sinkhole claim going on.
Okay. All
Those,
right.
those type of things are not really sinkholes, and they're not covered.
What exactly is like hurricane, flood, catastrophic coverage? I know, down here we talk about hurricane flood coverage. What does that look like to a homeowner down here in Southwest Florida?
Even though I've been doing this 51 years, with the Ian situation, I've learned a lot. We're really going through that with Ian. Never before have I seen a situation where you had devastation from both water and wind. And Ian was that.
Yes.
Generally, hurricane, you're dealing with property. The roof blows off, the windows blow in. With flood, it's pure water damage. And there's a definition of flood. The definition of flood since the beginning of flood insurance. And when I started in this business, there was no such thing as flood insurance. It didn't exist.
How we've changed.
Yes, yes. All because of the people along the Mississippi River, primarily. That's what brought flood insurance into fruition.
Okay.
But and the definition of a flood is any natural body of water overextending its natural boundaries.
Okay.
That's what a flood is. And did we have that with Ian? Big time. And I'm sure you've seen the pictures of the homes along Barefoot Beach, and well, of course, you've seen Sanibel and
It's awful.
Myers Beach. Hickory Boulevard docks in our area is a good example of that. And it's also an example how codes do work. For instance, the newly built homes on Hickory,
Yes.
they're 3-story. In most of the cases, and this is where you can break out property insurance versus hurricane insurance. Take one of those homes. I had several of those. The water floods, exceeds its natural boundaries.
And we're talking about, just so everybody knows, we're talking about Hickory Boulevard and Bonita Beach. And
Correct.
it's a lot of those homes sit right on the Gulf, and others sit right across the street on the bay. And
Exactly.
the water encroached all of them and went right on through into the bay, and
yes, yep,
tremendous amount of damage.
Yep, it moved the beach into the homes on the east side of the home of Hickory Bay.
Yes.
And on all our other streets that are in the same situation. When you see those homes, they look like 3-story homes. They are 3 stories tall, but the first floor is really not occupiable or not supposed to be occupied. That is simply hiding the pilings. Those buildings are built on pilings.
Mm-hmm.
Top 2 floors are livable square footage. The first floor is pilings, like the last pictures you saw of docks, you saw the pilings remaining. That's what these homes look like if you took away the walls that are hiding the pilings of those 3-story homes. And those walls are constructed they're called knockout walls, blowout walls. They're designed to hide the pilings. It's cosmetic purposes only. And it hides the pillars that hold up the living square footage.
Mm-hmm.
So let's take that home. Those homes had a lot of sand in the first floor, which you can use as a garage. Put your car in it. Of course, that was also damaged. But the flood insurance covers the damage to that area. Now, in that area is what you will find is probably an elevator shaft and a drywall space which contains floor steps. So flood comes through and damages everything, maybe even blows out the knockout walls. It really didn't do that in this case. So you've got a flood policy and you've got sand going out the back. You've got sand in your swimming pool. Your swimming pool is full of debris. Your pump is shot. Will the flood policy pay for that? No. The flood policy will only pay for cleaning the debris that's located in the footprint of your structure.
Really?
All the sand that was in the driveway, in the backyard, in the swimming pool, that is your problem.
And there's another type of coverage that covers that?
There is some new flood coming down the road that does.
Okay.
Mostly what people now doesn't.
Really?
Mm-hmm.
That's kind of counterintuitive to the fact that the flood had to get past a lot of that stuff to cause the damage to the interior structure.
Yes.
Fascinating.
Then it gets worse. Then you move up to the majority of the damage was confined to that first floor.
Sure. These newer structures in particular.
Correct. So if you have one of those homes, you probably have a homeowner's policy and a flood policy. Flood fixes everything on the first floor. Because in those cases, water never really got in the second floor.
Okay.
So there's no flood damage to floor number 2 and floor number 3.
Sure.
But you may have had doors blow out, windows blow in, roof damage that allowed water to get in. The other thing that we didn't talk about when you get into hurricane coverage is hurricane has a separate deductible. It's always a percentage. And it's a percentage, generally the one you see usually is 2%, 5%, or 10%. And that percentage is of your coverage A. If you look at a homeowner's policy, coverage A is the first line. It's your home, what the structure is insured for. So if your home was insured for $1 million, your deductible for a hurricane loss is 2% of $1 million. Very shocking to people when they come along.
Interesting. So that 2, 5, 10% is insurance of your deductible.
That is your deductible.
Oh, that is our deductible. Okay.
For a hurricane.
That is the deductible for hurricane.
So
Wow.
if you happen to choose, you got a $1 million coverage and a 10% deductible, you have a $100,000 deductible for hurricane.
Okay.
And in these cases, like we were just talking about, the second and third floor had no water damage, so flood isn't paying for anything. And the hurricane damage, let's say it's $30,000 and you have a $100,000 deductible, you're not going to collect anything.
No. So
those pictures you saw of homes being really, really damaged aren't really collecting all that much.
Wow. And so if they did have flood insurance, your flood insurance and your regular policy are essentially two separate policies of sorts that you're having written.
Yes, always.
Okay.
Yes.
Okay. Larry, this has been amazing. Thank you so much for all of your time, for your expertise, and great information and advice for people and knowledge. So your information, I'm going to have all your information down below too, so that people can easily access your info. And I just want to thank you again for joining us, everybody. Larry Hitzeman from Hanger Insurance Group, and has been in the business for many, many years. And I know we can all kind of say that sometimes, but
Yes.
It's been wonderful. Thank you so much. Any questions about community
Thank
real
you for
estate
having
related
me.
insurance, reach out to us. I hope all of this information helps you love the way you live, Southwest Florida.